Advanced Practitioner series. My name is Patrick Shepard. I'm very pleased to be joined today by Monica Asher from OGE's Ethics Law and Policy Branch. Today, Monica has agreed to return to continue discussing with us ethics authorities specific to non-career employees. We had so much fun last month in August that we needed to come back and kind of finish the job. So Monica, thanks very much for coming back and helping us to understand the rest of the ethics authorities specific to non-career folks.
Well, it's not so much this presentation focuses on the rest of the authorities. This presentation really is a continuation of what we did in the last presentation, which was basically an overview of the ethics authorities that are specific to non-career employees. What I wasn't necessarily able to do the last time, because there was so much information, was that there were certain topics that I wanted to go a little bit deeper on, but because of the breadth of the information that was available and that I wanted to cover, I couldn't go as deep as I wanted to into some of the more specific topic areas, particularly with regards to outside activities and covered non-careers. So that's what I'm going to be doing today. We're going to be looking at, a few of those authorities in a little more detail. I also want to note that this presentation is really meant to be viewed in conjunction with the first presentation, the one that was given in August. So I'm going to assume, maybe rightfully so or not rightfully so, that you've seen the presentation in August. It's not a prerequisite to understand the topics that I'm going to cover today, but I'd encourage you, if you haven't seen it yet, to go back and watch it, because it is going to present, again, an overview of the topics. It also discusses the ethics pledge a little bit, which I'm not really going to get into today.
Excellent. And this is a good time to remind everyone that all of our presentations are available for on-demand access immediately upon their conclusion on our YouTube channel, which is youtube.com/OGE Institute. So if you've not had an opportunity to watch part one, we hope you'll stay with us for part two and circle back and enjoy part one at your leisure. And if you want to refer back to these presentations as a reference, we encourage you to do so. It's one of the great things about having these distance learning broadcasts. So I'm sure you have a lot to talk about today, Monica.
I do.
So let's go ahead and pull up the slides and we'll get into it.
Okay, so as I mentioned, in our last presentation, I went into greater detail about what we mean when we say non-career employee, and I'm going to touch on this a little bit today. And then I also provided an overview of the ethics authorities that apply specifically or differently to non-career employees than to career employees. And again, I spent most of my time focusing on outside activities, although the first part of the presentation also covered the ethics pledge. So then with this second part of the presentation, again, I'm going to go into a little bit more detail on some of the outside activities topics, specifically the outside earned income limitations, 5 C.F.R. Part 2636, subpart B, and then teaching, speaking, and writing, particularly the definitions of compensation and related to official duties. And so to begin, I want to bring up this slide, which you saw in the last presentation, and this is our Venn diagram. What we mean by appointees and specific subsets of appointees. And so, as you recall, when we use the term appointee or non-career employee, we're looking at political appointees. And so when we say appointee, we're looking at the definition of appointee as it's used in the Ethics Pledge. That is Executive Order 13770. The subset of appointees that the last presentation was concerned with primarily was the covered non-career employees. And we spent a lot of time looking at this in the last presentation and kind of figuring out who your covered non-careers were. I'm not going to go into as much depth this time around, but just remember that these are going to be the most senior, highest paid non-career appointees in your agency. Last but not least, I'm going to be talking about presidential appointees to full-time non-career positions. Again, this was covered in some detail in the last presentation, and I'd encourage you to go back and take another look if you want to learn more about who what this group consists of. But more importantly, I also want you to note that there is going to be an overlap between your covered non-career group and your presidential appointees to full-time non-career positions. Again, your covered non-careers are going to be the most senior non-careers in your agency. And so it's very important to remember that when you have someone who falls under both categories in this overlapping area, when you have an ethics authority that applies to covered non-careers and it may apply differently to presidential appointees, you're always going to look at the more restrictive authority, again, when you're dealing with someone in this overlap group. And so next, I also want to recap what we mean when we say covered non-career, again, the most senior non-career employees of your agency. And it's helpful to think about this definition in two parts, both of which need to be met in order to have a covered non-career employee. So we have two boxes that we need to check. And so first, we need to be able to check off that pay or seniority box. To be a covered non-career, the employee must occupy a position classified above GS 15 on the general schedule, or if the position is not under the general schedule, the rate of basic pay is equal to or greater than 120% of the minimum rate of basic pay payable for GS 15 of the general schedule. And I'm going to talk more about that later. Keep in mind that SGEs are going to be specifically excluded from this definition. And then second, we want to be able to mark the non-career box. So there are several ways that one can be a non-career employee. They could be a non-career member of the SES, they could be a Schedule C, or they could be a presidential appointee, for example. These are just some of the ways that we're able to mark off that second box. So going back to that first box, the pay or seniority box, when we're determining whether someone is a covered non-career, we're going to be comparing their rate of basic pay to 120% of the minimum rate of basic pay payable for GS 15 of the general schedule. And so when we're looking at the employee's rate of basic pay for these purposes, we're looking at the lowest step or rate of pay of the grade at which the person is employed. And we also want to be careful. We don't want to be factoring in adjustments such as locality pay. Those are going to be disregarded for the purposes of determining rate of basic pay. So once we know the rate of basic pay for an employee, we're going to be comparing it to 120% of the minimum rate of basic pay payable for GS 15. And it's important to note that this number is going to change from year to year. But the good news is because this number changes, OGE makes this calculation for you and provides you with this number at the beginning of the calendar year. In fact, there are a lot of numbers that we use that are based on pay that changes from year to year. And so we issue an advisory. The last one was Legal Advisory 17-01 that does all these calculations so that you have them in a central place. And then just a quick note about the term rate of basic pay. A word of caution that rate of basic pay may have a different meaning depending on what authority you're looking at. So for the purposes of determining whether you have a covered non-career employee, as well as for public financial disclosure, we see that rate of basic pay means the lowest step authorized for a pay grade. This is not going to be the case when we see a rate of basic pay in 18 USC 207C. It uses the same term, but that term has a much different meaning. And so I'm not going to be going into detail about that here, but I definitely encourage you to take a look at our advisory 98X2. that provides further background on these two different ways of interpreting rate of basic pay, these two meanings. So next, I want to go into more detail about many of the restrictions that pertain to outside activities. Again, in the last presentation, I kind of just touched on them, provided an overview of the kind of the basic restriction, but I'd want to go into further detail in this presentation. You'll see that as I move through the list of outside activities, I'm using the same chart that I used in the last presentation, just to give you kind of a reference as to where we are in the presentation. And I want to just note that even though I've labeled this outside activities, this is not the universe of ethics authorities that apply to outside activities. So if you're dealing with someone who's a covered non-career, if you're dealing with someone who's a presidential appointee, you're not only going to be looking at the authorities that I've listed on this screen. You're also going to have to keep in mind the criminal conflict of interest statutes. You're going to have to keep in mind the standards of conduct. You're going to have to keep in mind any agency supplemental ethics regulations, as well as any other applicable authorities that may address that particular outside activity. So again, this is what you're looking at now are the authorities that are going to apply, again, specifically or maybe a little bit differently to covered non-careers, to presidential appointees, than they do to other employees.
And for those folks who are interested in learning more about how to provide advice and counsel to employees who are engaged in outside activities, we do have a massive open online course that is available on the YouTube channel where you can learn about the process, learn about the scope of authorities that you should consider, and try your hand at advising employees based on those authorities.
So first, I'm going to start with the restrictions on outside earned income. So before we get into what the restrictions are, we want to kind of go a little bit more basic and talk about what we mean when we talk about outside earned income. What is the definition of compensation and outside earned income for these purposes? So both terms refer to compensation for services that are rendered to someone other than the U.S. government. And note that there are many things that are excluded from this definition of compensation. So we're not looking at passive investment income. We're not looking at copyright royalties. We're really looking at compensation for services that are rendered. This chart should look a little bit familiar because we did use it in the last presentation, but I think it's important to show you again because I want you to keep in mind that for your career employees, there really aren't going to be any restrictions for our purposes on outside earned income as far as the amount is concerned. The same goes for your appointees who are neither covered non-careers nor presidential appointees. However, there is a limitation for your covered non-career employees. For 2017, they can earn up to $27,765 in outside earned income. And again, this is outside earned income that meets the definition of outside earned income that we just discussed. Presidential appointees are going to be even further restricted as they cannot earn anything in outside earned income. And that's because there's a prohibition for this group on receiving outside earned income. Remember again that many of your presidential appointees are also going to be covered non-career, so they're going to be again in that middle overlapping category. And so if you have a presidential appointee who's also a covered non-career, you're going to follow the stricter requirement, and that means that with respect to allowable outside earned income, there just isn't any for this group. So then with respect to the covered non-careers, how do we get to this 27,765 number? So if you're familiar with this limitation, you probably know of it as the 15% limitation. And what the 15% refers to is 15% of the annual rate of basic pay for level 2 of the executive schedule under 5 USC 5313 as an effect on January 1st of such calendar year. So in short, we call this the 15% limitation. Again, when this dollar amount changes, we're going to be issuing a legal advisory with the new 15% figure, so you don't have to do this calculation yourself. And it's going to be in the same legal advisory in which we give you the 120% figure that I talked about earlier. So remember that this 27,000 number is the maximum amount of outside earned income that a covered non-career can earn for 2017. So hypothetically, what if you have a covered non-career that provided services at the end of a calendar year, but didn't actually receive the payment until the beginning of the next calendar year? So here we're looking at income that's attributable to that calendar year. So in other words, when the services were provided. And for the purposes of for this limitation, we're not concerned with when the income is paid.
So we're really looking at when you do the work.
When you do the work.
Don't really care when you cash the check.
Right, at least for the purposes of the outside earned income limitations.
Okay.
Again, going back to our 27,000 number, it's the maximum amount of outside earned income that a covered non-career can earn for 2017. But because things don't fall squarely within one calendar year or another, what happens if an individual becomes a covered non-career in the middle of a calendar year? And this is particularly important in a presidential transition year when you have covered non-careers, entering government service. So we want to know how you calculate this number. How do you, what do you do for someone who enters government service on October 1st? What would be the maximum amount of outside earned income that the employee could earn for the year? So the first thing we want to do is determine the number of days that the employee will hold the position during the year. And note that we're not just looking at working days. So October has 31 days, November has 30 days, December has 31 days. We've got 92 days that this person is going to hold the position. Next, we want to find out this 15% number, and you can either do the calculation yourself or you can take the shortcut and look at Legal Advisory 17-01. And there you get that 27,000 number that I talked about earlier. Next, you want to divide by 365. And then you want to multiply the number of days that the employee will hold the position, so our answer from the first step, by that rate that we got from the calculation in step 3. And then finally, last step, we just want to round to the nearest dollar. So moving on, next I'm going to be discussing 2 restrictions that I introduced in the last presentation. These relate to professions involving fiduciary relationships, and these restrictions are found at 2636.305. And then just a quick note about the asterisk that you see. In cases where you see the asterisk on this chart, keep in mind that there's no specific restriction that applies to presidential appointees specifically. But again, remember that many of your presidential appointees are going to fall into that overlapping category and will also be covered non-careers. So as I mentioned before, these two restrictions that I'm going to discuss will prohibit covered non-career employees from receiving compensation for practicing a profession that involves a fiduciary relationship. It will also prohibit them from receiving compensation for affiliating with or being employed to perform professional duties by a firm, partnership, association, corporation, or other entity which provides professional services involving a fiduciary relationship. Again, remember that if you're dealing with a presidential appointee, that individual is subject to a complete ban on outside earned income. So again, if you have a presidential appointee who's also a covered non-career, you're going to get the same result under both authorities. So I'm just going to walk you through this this chart. Here we want to know, how do you know if your covered non-career's proposed activity is restricted under this authority? So first, you want to ask whether the employee is practicing a profession. So in short, a profession as defined in 2636-305 is a calling requiring specialized knowledge and often long and intensive preparation.
So this is sort of our threshold question. This is the first hurdle we have to jump over. It's not the whole thing.
Right. It's actually, it's one of the first threshold questions. Because if the answer is yes, you're going to be looking then at whether the profession involves a fiduciary relationship. And here, this means a profession in which the nature of the services provided causes the recipient of those services to place a substantial degree of trust and confidence in the integrity, fidelity, and specialized knowledge of the practitioner. Such professions, for example, would include practitioners in law, insurance, medicine, architecture, financial services, and accounting. And I just want to note that not all of these are completely intuitive here. Particularly architecture is not something that would immediately come to mind for me. And then if the answer to this question is yes, the covered non-career cannot receive compensation. I also want you to keep in mind, though, that this prohibition doesn't pertain to uncompensated service. So, for example, if you had a covered non-career who was a practicing attorney and wanted to provide free legal services through a pro bono program, this particular authority would not prohibit that activity. There may be other statutes and regulations that you would want to be aware of, but this 2636-305 in and of itself would not prohibit that uncompensated pro bono service. So going back to the first question, if the answer to the first question is no, in that case, you want to ask whether the employee is affiliating with or being employed to perform professional duties by the entity. If the answer to that question is yes, you want to know, does that entity provide services involving a fiduciary relationship? And if the answer to that question is yes, the covered non-career cannot receive compensation. So next, the second restriction found in 2636.305 applies to the use of one's name. Specifically, a covered non-career shall not permit his or her name to be used by any firm, partnership, association, corporation, or other entity which provides professional services involving a fiduciary relationship. So let's give you an example of how this works. Okay, so for example, suppose you have an accountant, Mr. Charles Debit, who is a founding partner of the firm Debit, Jones, and Waters. So here's Mr. Debit again. He's offered a covered non-career appointment. So should he accept this covered non-career appointment, he has to terminate his partnership, but in addition, the firm would also be required to delete his name. So slight variation. Suppose we have Debit Jones and Waters, and it's Charles's deceased father, Mr. John Debit, who was the founding partner for whom the firm is named. And you have Charles Debit here, who's being offered the covered non-career appointment. He merely worked at the firm. In that case, the name Debit would not need to be deleted from the firm's name. However, Charles Debit's name may not appear on the firm's letterhead, as he enters duty as a covered non-career employee. Again, we're looking at the use of one's name. Again, I probably sound like a broken record here. This restriction pertains to covered non-careers. So if you have a presidential appointee, you're going to want to check to see if he or she is also a covered non-career. Because if so, the presidential appointee is also going to be subject to this restriction by virtue of being a covered non-career. These next two restrictions I'm going to group together because they both relate to teaching, speaking, and writing. So this next restriction, which is found at 2636.307, applies specifically to teaching, and that is a covered non-career employee may receive compensation for teaching only when specifically authorized in advance by the designated agency ethics official. Again, moving on to our presidential appointees, they can't receive any outside earned income, so they cannot be authorized to teach for compensation. So if we have a covered non-career employee who's not a presidential appointee, it's important to remember that even if that employee does receive authorization, they're still subject to that 15% outside earned income limitation. You're also going to want to keep in mind that teaching here has a specific definition, which is not limited to teaching in a formal classroom setting. So here, when we refer to teaching, we mean any activity that involves oral presentation or personal interaction, the primary function of which is to instruct or otherwise impart knowledge or skill. Again, it's not going to be limited to teaching that occurs in a formal setting, but it's also going to extend to instruction on an individual basis or on a more informal setting.
So things like mentorships or advising on theses or things like that, we're construing teaching broadly here.
It could. And so we really want to look at the facts as they're presented to us by the employees when one of these situations arises.
Excellent.
And so we're going to be also concerned with the standard for authorization. There's certain criteria that have to be followed when determining whether to authorize a compensated teaching activity for a covered non-career employee. So first, we want to be sure that the teaching will not interfere with the performance of the employee's official duties or give rise to an appearance that the opportunity was extended principally because of the employee's official position. Second, we want to make sure that the receipt of compensation does not violate any limitations or prohibitions on compensation or outside earned income. And then finally, we want to make sure that neither the teaching activity nor the receipt of compensation will violate applicable standards of conduct or any statute or regulation related to conflicts of interests. So that was the last topic under 2636 that I'll be discussing. Now I'm going to be moving on to teaching, speaking, and writing as they're discussed in the standards of conduct. So part 2635. And before we get into covered non-careers specifically, I want to start with the general rule. And that I want you to remember is that except as permitted, an employee, including a special government employee, shall not receive compensation from any source other than the government for teaching, speaking, or writing that relates to the employee's official duties. And so here, when you look at this definition or this restriction, there are two concepts here that are particularly important. The first is going to be compensation, shall not receive compensation. And the second relates to the employee's official duties. So for teaching, speaking, or writing, that relates to the employee's official duties. And what you're going to see here is that covered non-career employees are more restricted than other employees, because for them, there are going to be more things that fall under the category of compensation, and there are going to be more things that will be considered related to their official duties. So what do we mean by compensation? And this is not a trick question, although I asked a very similar question at the beginning of the presentation. We're looking here at compensation for the purposes of 5 CFR 2635.807. It has a different definition than compensation for the purposes of 5 CFR 2636. So for our purposes here, compensation includes any form of consideration, remuneration, or income, including royalties, given for or in connection with the employee's teaching, speaking, or writing activities. Unless accepted under specific statutory authority or an agency gift acceptance statute, it includes transportation, lodgings, and meals, whether provided in kind by purchase of a ticket, by payment in advance, or by reimbursement after the expense has been incurred. And I want to flag for you one thing, and that here for our definition of compensation for the purposes of 2635.807, royalties are included. Royalties are not included for the definition of compensation when we're looking at Section 2636. And I'd encourage you, specifically when you're looking at a teaching, speaking, or in particular writing activity, to look at Diagram 08-006. It's a very comprehensive advisory on book deals, and it really goes into detail on your covered non-careers, on presidential appointees, as well as royalties and other types of income.
And I think this is a really good place to remind folks that when we're looking at outside activities, because there are so many different authorities that can be in play, it's very, very helpful to be diligent about considering a single authority at a time, rather than trying to come up with some sort of general answer to the question of whether someone can do this and get paid. So if you watch our Outside Activities Massive Open Online course or attend a workshop at OGE, we will encourage you to go through methodically each of the conflict of interest laws, each part of the standards, the provisions at 2636, and any applicable executive orders, to make sure that you've considered each authority on its own before advising employees. And this is a good example of why we encourage that.
So the definition of compensation for purposes of 2635.807 is going to be used for both covered non-careers and for your other employees as well. Where you're going to see the difference between covered non-careers and your other employees is going to be in the things that are excluded from the definition of compensation. So for the first three, you're going to see that these are excluded from the definition of compensation for both sets of employees. The difference is going to be in this last point: travel expenses consisting of transportation, lodgings, or meals incurred in connection with the teaching, speaking, or writing activity. So for most of your employees, this is going to be an exception to the definition of compensation. However, for your covered non-careers, you're going to lose this last item as an exception. So if you're advising a covered non-career, you need to remember that travel expenses will not be excluded from the definition of compensation. So bottom line, They will not be able to accept travel expenses if their outside teaching, speaking, or writing relates to their official duties. The other concept under teaching, speaking, and writing that I wanted to address is related to official duties, because this too is going to be a little bit different for your covered non-careers than it is for your other employees. So what does it mean for the teaching, speaking, or writing to be related to one's official duties? So for both sets, an activity is going to be related to the employee's official duties if it meets one of these criteria. So for example, if the invitation was extended by someone with interests that may be affected substantially by the performance or non-performance of the employee's official duties, this is going to be considered related to official duties, no matter who is asking the question. Additionally, the teaching, speaking, and writing could also be related to the employee's official duties because of its subject matter. And so for those who are not covered non-careers and also not SGEs, the teaching, speaking, or writing relates to the employee's official duties if the subject matter of the activity deals in significant part with one of two things. First, any matter to which the employee presently is assigned or to which the employee had been assigned during the previous one-year period. Or second, any ongoing or announced policy, program, or operation of the agency. So these two things are also going to apply to your covered non-careers when the subject of the proposed teaching, speaking, or writing relates to one of these two things. However, for your covered non-careers, it's also going to relate to the employee's official duties if the subject of the activity deals in significant part with the general subject matter area, industry, or economic sector primarily affected by the programs and operations of the agency.
So it seems this is a much broader prohibition or restriction when we're talking about our covered non-career folks versus our special government employees especially, but also our non-SGE sort of regular workaday employees.
Yeah.
So that's, I guess, an important thing to keep in mind, especially if you're accustomed to advising regular employees and you have a covered non-career official, to remember that this restriction is broader, and it's important to have a careful read of subpart H.
Right. And so, for example, if you had maybe a program analyst, a career employee at the EPA, who wants to write a book about the history of the environmental movement in the U.S., this career employee would be permitted to receive compensation for writing the book. Again, it deals with the general subject matter area, industry, or economic sector primarily affected by the agency's programs or operations, and it would not be considered related to that employee's official duties. However, if you had a covered non-career and they wanted to write the exact same book, the history of the environmental movement in the U.S., they would not be permitted to receive compensation for writing, again, the same book, because the subject of the book deals with the general subject matter area primarily affected by the programs and operations of the EPA. And I'm not going to discuss special government employees here, but the way the reg is written, I thought it would be useful to include them on this chart because they're treated a little bit differently. And if you're using this chart as a reference, I wanted it to be as complete as possible, even though we're really not going to go into them during this presentation. So again, the takeaway is that covered non-career employees are going to be more restricted than other employees here. Because again, for them, there are going to be more things that fall under the category of compensation, and therefore more things that they cannot accept. And there are going to be more things that will be considered related to their official duties. So that concludes the presentation. There is not going to be a part 3 to the best of my knowledge. But again, I'd encourage you, if you haven't seen part 1 of the presentation, the part that was delivered back in August, I'd really encourage you to take a look at it. Again, it's going to be more of an overview, but it is going to touch on the ethics pledge, which I wasn't able to cover in this presentation.
Excellent. Well, thank you very much for joining us, Monica. We really appreciate you sharing with us for a second time your expertise with ethics authorities specific to non-career employees. And thank you to all of you who have tuned in. We hope you have found this helpful. Just a reminder, you can watch this and all presentations on our YouTube channel, which is youtube.com/OGE Institute. If you have thoughts or ideas that we could cover in future training broadcasts, please let us know, because we are always looking for ideas, and we look forward to joining you next time for our next presentation. So thanks very much.